So this is the final video in chapter 3. I'm going to demonstrate the transactions using problem 3.7 as an example because it has all the different types of transactions in it. The business is Hot Suds Car Wash, and here are the accounts that they have. Looks like they have 5 assets, 1 liability, and 1 owner's equity. So we're going to kind of do the 4 steps, but just talk through them. And they're showing us an example of the first transaction, the one that we talked about, always happens first. They need to invest in the business. So Regina Delgado invested $25,000 in the business. The 2 accounts that are affected are cash and the capital account. Cash is an asset. Capital is owner's equity. Cash is increased on the left side of the equation. Owner's equity is increased on the right side of the equation. So how you'd put that into Excel would look like this. Obviously you can put your name up here. You don't really have to because I believe Classroom will have put your name up here. So we're going to have $25,000 for cash. And then Regina Delgado has $25,000 cash. So here's our equation. Assets equals liabilities plus owner's equity. The left side is going up $25,000. The right side is going up $25,000. I'm not going to do my formula here. I'm just going to put these totals down and we'll do formulas for the next problem when we have 2 things to add up. So let's go and take a look at transaction number 2. Transaction number 2 says that we bought car wash equipment with cash for $12,000. So up here I do have an asset of car wash equipment. That's going to go up, and I paid for it with cash, so cash is going to go down. So I come over here and cash is going down $12,000 and car wash equipment is going up $12,000. I'm now going to calculate the balance for all of my accounts. So I'm going to come here on the balance. I'm going to do an auto sum, or I could just simply add the 2 numbers together, but I'm going to do the last transaction's balance and this transaction. So that's the sum of B7 to B8. I'm going to hit enter. I'm going to come back on my sum that I have right here, and I'm going to take my fill handle and I'm going to pull that all the way across. And I'm just going to ignore these places right here. And so I have $25,000 on this side of the equation and $25,000 on this side, so I know that I'm in balance. Okay, let's look at number 3. Transaction number 3 says on January 5th we purchased on account, so that means accounts payable, $2,500 of office equipment. So looking up here real quickly at my accounts, I have office equipment as an asset. If I purchased on account, I'm going to use accounts payable. And that was for $2,500. Okay, so if I jump over here on transaction number 3, office equipment went up $2,500 and I bought that on account. Accounts payable, they now have claims to my property of $2,500. Both sides went up. I'm going to take this formula. I'm going to do a Control-C, copy it down to this balance right here, paste, Control-V, and I'm going to then take that and drag that across so that I know my formulas are good. And it looks like on this side of the equation I have $25,000 or $27,500, and over here I have the same. All right, we're going to jump and look at transaction number 4. Transaction number 4 says on January 10th I wrote a check for the rent, $800. Check, you'll remember, is equal to cash, and rent is an expense, and an expense decreases capital, and that was for $800. So over here I wrote a check for $800 and then I'm going to come across, and the expense decreases capital. Remember, the parentheses are another way for Excel to show negative numbers. And I'm going to take my balance right here, and I'm going to copy it, and I'm going to paste that formula down here. Using my fill handle, I'm going to pull them across. And if I did the math there, I'm sure that those two numbers would be the same as this. Maybe I'll just do a little check for you to just so you can, oh, we'll do that at the end maybe. Okay, let's look at transaction 5. Transaction 5 said on January 12th, we received cash for services performed, $1,000. So basically that's a revenue transaction. Whatever our services, which are car wash, right? So $1,000 in cash for car wash. Our revenue is going to increase our capital, and obviously our cash is going to go up. I already forgot how much, $1,000. So we're going to come here, cash is going up $1,000, and revenue is going up $1,000, so capital is going to increase. Awesome. So I'm going to take this formula where I add the two numbers above, and I'm going to paste it here. And if you want to double check, yep, I'm adding the two numbers above. I'm going to take my fill handle and I'm going to pull it across. And just to make it look pretty, I'm going to get rid of those two guys. Both sides went up 1,000, and so I'm in balance. All right, transaction 6. Transaction 6 says on the 15th, the owner withdrew $600 from of cash from the business for her personal use. So cash is going down, and a withdrawal decreases capital. So capital is going to go down for $600. So here we're going to say a negative 600. I'm going to come across to here, a negative 600. Okay, I'm going to take the balance I had from the previous transactions, copy and paste it, and I'm going to pull that one across with my fill handle. Okay, remember using the fill handle is important because it cuts down on mistakes. If you're sure that this one's correct and you pull it across, the other ones will also be correct. Two more. So number 7, on January 20th, we purchased a desk for $1,000. We paid $200 in cash, and we agreed to pay the balance in $800 in 30 days. This is called a compound entry because it's affecting more than two accounts. So we first of all have a desk that's worth $1,000. That's an asset that's going up. We also paid cash, so cash is going down $200, and we have an accounts payable of $800. So let's put that into a transaction. So first of all, we're going to put that under office furniture, our desk. Okay, and that's the value of the desk. We paid out $200 in cash for that transaction, agreeing to pay the $800 later. So on this side we have $800, and on this side we have a net of $800. So our equation is going to stay in balance. I'm going to copy this formula here to right there, and I'm going to take this and pull it across. All right, our final transaction, number 8, says that on January 25th, we provided services worth $600 on account. So providing services means we had a revenue transaction, and instead of receiving cash, we're gonna get that eventually. That's going to be an accounts receivable. So to put that transaction in on the 8th, I'm going to come over here to accounts receivables going up $600, and my revenue is also going up or increasing capital. I'm going to take this formula right here and copy it and paste it down here and pull it across. And just to double check, sometimes I like to say, let's just see for sure if my balance is the same on each side. So I'm going to do a sum, and I'm going to drag my balances on the left side of the equation. And they're currently equal to 28,500. I'm going to do the same for my balances on the right side of my equation. Okay, so my equation is in balance. I have 28,500 worth of assets, and I have 28,500 worth of liabilities plus owner's equity. Problem 3.7 done.